My friends, welcome back to the channel. Let me start by saying I'm not a cat. Wait, somebody's already used that line. I am not an ape, nor am I a financial advisor. Everything about this video is to help educate you from a standpoint of I just want you to make great decisions for yourself, your family, and your portfolio. If this video does help you out, please like and subscribe, all that good stuff. Follow me on Twitter, Colin_Gladman. Yes, there's a lot of fake accounts out there. No, there's nothing I can do about it. No, I won't message you about crypto or anything along those lines. So yeah, having said that, let's jump into the video. Today we're going to talk about all things GME related. We're going to talk about a little bit about the space call. First and foremost, if you tuned into the space call last night, thank you so much. I've jumped into a couple before. Was really hesitant about doing it in the first place, but my buddy Bronx Viking, which you can also follow him on Twitter, he set it up, put it together, and he invited me, and he's my dude. So if he invites me, I'm going to do everything I can to show up for it. And actually, it turned out to be fantastic. I wasn't able to stay the entire time. I apologize for that. But everything that I did here was very rational. One thing that I will say about it, which you can go back and listen to it, one thing that I loved about it is there was a bunch of incredibly smart people in there. And whether or not you're a fundamental person or you're a flow person, flow talking about watching option flow, or whether you're a technical trader like myself, we pretty much were all coming to the same conclusion as far as areas and levels, that we were looking to watch, want to see hold as support. So there's always lots of ways to skin the cat, but it was really cool to see people who view the market very differently, who trade the market very differently. At the end of the day, we're all still coming to relatively the same conclusion on stuff. So highly recommend going and listening to it. Another thing that we talked about is there were a lot of just people saying, I don't know. And nobody knows. And nobody knows what GME is going to do, with the funds that they raise. And so that's what smart people do. Smart people have no problem admitting, I don't know. We're just going to have to wait and see. So there's going to be some of that in this video as well. But I want to go over what I talked about in the space call last night. And then I want to explain a little bit about what happened on Twitter today. We'll get there in a second. And then at the end of the video, we'll talk a little bit about what I'm looking for moving forward. So having said that, I will keep it as as short as I can, but we're going to get the information out there. I appreciate you tuning in and looking to improve. So first thing I talked about last night in the space call was the overall fib from where GameStop squeezed up to in January of 2021 back to the lows back over here in April of 2024. This fib, which if you'll notice, this is a weekly chart. If you'll notice, both times GameStop really got moving is it pushed up to this golden pocket area up here around the 46 to 50 level, and it actually blasted through one time and then just came back up and retested it a second time, and both times that got rejected. So over that 46 to 50 level is going to be massive going forward, and I'll get into that when we talk about where I think potentially GameStop could move. But the first level that I was looking at is back over here at this 25 level. Once again, going back to a weekly chart, now I'm going to get rid of this fib, is I want to see this whole area between essentially kind of that 20 to 25 level. You really want to see this level just start making a support resistance flip. So from all the way back here in January 2022, you can see that this was support the entire time. Yeah, you had a couple of wicks below, but overall, this entire area was support from January of 2022 up until December of 2022. Excuse me. So an entire year of support is what this showed. Then once it finally broke below, what happened? Well, then it all started turning into a major resistance point. The same thing, couple wicks above. What I always teach in my Discord is anytime you're drawing like trend lines or supply and demand zones, they're not steel barriers, okay? They're levels of interest, they're levels of liquidity too. So you got to, even if you get a couple wicks above or below, that's fine. But what you want to do is you want to get the large portion of the area. So, support for a year. Then all of a sudden starts becoming resistance, and then once it really loses it, then you kind of go on this long tumble down here. And where did it find support again? Back over here around this $10, which if we even zoom out anymore, all the way back to 07 and 2013. So it's no surprise that it came all the way back to here before once again bouncing and finding support. And then of course you had the unusual options activity, which started pushing the stock price up, and then of course Roaring Kitty comes back and then boom. So also a couple areas of interest that I'm looking at is going to be the fib area that we have that's kind of watching over this entire range. So that's going to be from the lows of April of 2024 all the way back to where it squeezed up to in May of 2024. So this is the range that we're looking at. Really want to see, once again, going back to it, that 25 level is huge, but the reality is anywhere, and you can see today, we dipped as low as that 23, which is why I posted on Twitter. Yeah, I'm okay. I just don't want daily closes in that 23 area. The reality is we could come down here. We could trade in here for a while, kind of round out, consolidate before pushing back up, and that's going to be fine. But over this 0.5 right here, which was also the support on Tuesday, June the 24th, want to get back above that 25 level. We'll feel better over that 25 level. Really start feeling better if we can get back over the 30 level. And then the last fib that I was looking at, which is this kind of little bit more micro one right here, which you can see the 786 and the 618 all right in here. Once again, going back to that 25 level. So 25 is kind of the level that I kept talking about. So definitely want to see us get back above that. The reality is with GameStop's offering going on right now, if they don't break below this on that offering news, then I have no doubt about it, we're going to be curling back up here and pushing back up towards the 50 levels. Potential if, we also have lots of data going on this week between CPI, FOMC, PAL speaking, PPI data. So there's also a lot of, outside factors that are going to be coming in. Right now, the main look that I'm watching in GME is this kind of trend line right here to right here. So this is kind of the consolidation area that I'm looking for. So what I would definitely like to see is after bouncing on this trend line from the lows back over here, once again back in May of 2024, I would like to see our support area. So we got a lot of confluence between trend lines and fibs and support resistance flips. What I would like to see is certainly a pushback up here towards that 40 level. Anything over 40 on GME, things start getting a little spicy, okay? Over 30 is great, but between 30 to 40 to me is a little bit of that kind of noise zone. Over 40 is where things can start getting spicy. So overall, that's kind of what I'm looking for, what I talked about last night in the space call. So having said that, once we dipped our toes down in here into this supply range earlier today, I decided to sell some puts on GME. I posted that on Twitter. Just letting people know, hey, I think this is a great spot to potentially sell some puts. Obviously, I could be wrong on that, but it's my money. If I'm wrong with my money, then is what it is. And there was a person, like, I don't remember what the name was, like Super Soaker 9000 or Super Stonk. Sorry, you guys know me. There's one of those names that basically just screams, I go to Reddit and spend all day on Reddit and then jerk off in my mom's basement the rest of the day. Yeah, Super Stonk GME, who immediately starts blasting me. You're part of the problem. You were on a space call last night talking about how bullish you are while you're loading puts at the same time. I was like, dude, you don't know what you're talking about. Selling puts is a bullish bet. And then there was another person who was very kind and was like, hey, I don't understand what you're talking about. And I was like, you know what? We're going to take this negativity and this frustration and we're going to turn it into something good. We're going to turn it into a teachable moment. So if you're here, that's what we're doing. So let's go over here and selling puts. Number one, what is it? Okay. Well, in the market, you're either bullish, you're bearish, or you're neutral. Okay. So there are the bullish bets. There are the bearish bets. And then there's neutral in between. Okay? Bullish is when you either buy calls or you sell puts. Now, when you buy calls, you're definitely bullish because you need that stock moving up, and time is working against you. Price is going to be working against you. When you buy calls, you are nothing but bullish. When you sell puts, it's definitely a bullish bet, but this one also tiptoes over here into the neutral category. And then bearish bets are going to be buying puts and selling calls. Same thing. When you sell calls, whoops, sorry, my handwriting's terrible. You're also tiptoeing back over here into the neutral. So overall, I would still say selling puts, you definitely are more bullish than you are even neutral. Certainly not very bearish at that point in time. And then selling calls is the same way. You're either bearish or you're somewhat neutral on it, or you're just at a comfortable place where you're looking to take some profits and potentially sell some stocks. And that kind of comes back into the neutrality part of it. So how do you sell a put? What is selling a put? Well, when you sell, come on. So no one's going to let me move this around? All right, whatever. We'll just roll with it. Dude. Normally this lets me... All right, whatever. So when you sell puts... Sorry, let me back up here. This will help you. Sorry, this freaking thing messing up, throwing me all off. You guys know the deal. I only do these things pretty much just with one take, and is what it is. We're not going to do any fancy editing or have green screen behind me and all that other fancy stuff. It just is what it is. So what is selling a put? Well, when you sell a put, essentially what you're doing is you're agreeing to buy the stock at a certain price. So just need a little bit more whiteboard to work with here. So selling a put means agree to buy at a certain strike. What strike did I agree to do that at? I agreed to buy at 20. Now, once again, going back to the chart. So I have a big support area right here on GameStop and kind of that 25 to 27 all the way down to really about that 21. But the reality is I mean, even all the way down to 20, there's been lots of bounce points in here. So what I did was I sold a 20 put. For that, so when you buy puts or when you buy calls, you pay premium. That premium is what gets eaten up by theta every single day that you have the position open. When you sell puts or when you sell the calls, you are collecting the premium at that point in time. Now, what's the downside to this? Well, the downside to this is just like any contract when it comes to options, it is in 100 share value. So at a 20 strike times 100, you have to have $2,000 in capital. I only ever sell cash secured puts or cash covered calls. What that means is that I already have the money to cover the purchase of the shares. So if you had $2,000 of cash available in your trading account, you could have literally done the exact same trade that I executed today. So you can also sell naked covered calls and naked puts, and I think that's idiotic. So my personal opinion, you do what's best for you. My personal opinion is always have the cash to cover the bet that you're making, right? I mean, if you go to the casino and you bet $10,000 on the Chiefs to beat the Patriots in the Super Bowl, and you actually don't have the $10,000, that's not going to end well for you. So it's just always better to have the cash before making the bet. So to sell a 20 strike put, you got to have the $2,000. Now for that, I was paid $60. Now, here's where people who, all they want to do is post, these super sexy options trades where they're like, I turned $100 into $8 billion, like if your stock's in real estate on Twitter, and it's not sexy, okay? But My first 3 years of trading, the only thing that I did was either swing shares and wheel trade, which wheel trading is the combination of selling puts and then selling calls. Now, doesn't sound like a lot of money. However, at the time, that strike was still 5 points out of the money. Like I sold these right around when GameStop was right around 25. So I sold this when that is 25, or excuse me, when the stock price was at 25, which is 20% out of the money, which I know you go, well, 20 to 25 is not that big a deal. But if you take a stock like Tesla and so like at 175, that would be like being able to sell a put on Tesla for 140. So I just did it based off of 175. That'd be like being able to sell a put for 140 on Tesla and still being able to collect 3% on your money. So, you know, the 60 divided by the 2,000 is exactly 3%. And that's what I sold it for. So the stock can still drop 20%, which on GME, I agree. When it's volatile like that, that's why you can get such good money. Because honestly, like a 20% down day on GME right now would not be the end of the world or surprising for most people. So, but what I'm doing is I'm agreeing with the market maker that, hey, if by Friday, I sold this week, by the way. I want to make sure I'm clear on that. So that was 6/14, I believe. Is that this Friday? Sorry. Stupid. Yeah, 6/14. So what I agreed to with the market maker essentially is if GME is at or below $20 on this Friday, I'm going to buy 100 shares of GME. So if GME closes at $19.85, I'm going to own. Now, I sold a lot more contracts than this, but just using this for educational purposes. So if GME closes at $19.85 on Friday, I'm going to own 100 new shares of GME. And I'm going to get assigned at that 20 strike. But the good news is I'm collecting this 60 no matter what happens on it. So the reality is you go 2,000 minus my premium that I've collected, and now I'm at 1940. So even if GME does close at 1985, I'm still coming out ahead because it's really like I'm getting assigned at 1940, right? So I'm getting a discount. I'm being paid to buy a stock that I already want to buy. If you said, hey, Colin, would you want to buy 100 shares of GME at 20 bucks? And I was like, you know what? Yeah, I think that's good. And then your buddy was like, hey, I'll also give you 60 bucks if you're willing to do that. I was like, well, yeah, you want to pay me for agreeing to buy a stock that I already want to buy at a price that I already want to buy it at? And I'm going to get a discount and a premium for it? That's a great deal. Now, what's the risk here? Just like anything else in investing, this has risk too. The risk is Ryan Cohen comes out and says, you know what? Not only do I want to dilute now, I want to go full Adam Aaron and I want to dilute at the lows. And then GME drops down to 18, they dilute again, and then it really dumps down to like 10 or something like that. So my risk is going if GME really continues to plummet. But then you go back to, well, they're doing an offering right now, so the time to sell puts is when things are ugly, when no one wants to buy. Just like I always tweet, right? When it's time to buy, nobody wants to. When it's time to sell, nobody wants to. Nobody wanted to sell GME when it was up at 50 last week, and now nobody wants to buy it down here when it's 20. And of course, you know, and this is where I'll get some YouTube comment like, I'm always buying, bro. I never stop buying. I just buy. Red day, green day, don't matter. I just buy. And that's great if that's what you want to do. But the reality is when the stock is running, that's when most people are like, oh, I got to get in. The FOMO kicks over. They're buying hand over fist. And then when it's pulling back, when it's getting really ugly, oh, it's no, I'm getting diluted. I don't want to buy. They're diluting right now. So me personally, I buy the fear, I sell the greed. That's the way I try to approach. I'm a contrarian trader. That's the way I try to approach things. So once it comes down to my level where I want it to be, yeah, I'm gonna put in a buy order essentially, and I'm gonna get paid to buy a stock that I already want to buy. Once again, yes, there's the risk of course, the stock can keep tanking, but then you ask yourself, is that really a risk with them about to have $5 billion in cash? I already know dilution is going on right now. Once dilution is over, guess what's going to happen? Pop. It's going to pop. And then I'm going to sell calls on it probably. Well, assuming I get a sign. I don't think I'm going to get a sign. But if I do, it's okay. So I don't ever put out a buy order unless I'm okay buying at that range. And just like I don't ever put a sell order out unless I'm okay selling in that range. I know that sounds like duh, but it's the way you have to approach things, right? So at the end of the day, I'm okay buying GME at 20 because in my opinion, with $5 billion in cash, with the buzz of Roaring Kitty being back and everything like that, sure, I might see a little bit lower. I laid out a case for 18, which I'll go over here in just a second. But you know, if it drops to 18 in the time, that's fine. Like I said, then I'll sell calls. It's cool. So hope that's somewhat clear on what selling puts is. And if you sell calls, you're doing the exact opposite. So when I sell a put, I'm agreeing to buy stock at a certain price and I'm paid a premium to do so. When I sell a call, I'm agreeing to sell my shares at a certain price and I'm being paid a premium to do so. I've only sold cover calls once on this run up by GME, and it was actually on this day whenever it ran up to 40 and I sold I believe 40 cover calls. It was either 40 or 35, but the stock dropped so fast that I made 50% on that premium and closed it out that day. So selling puts or selling cover calls on these meme stocks, on these volatile stocks, yes, it's risky, once again, just like everything else in investing. However, you can make great premium to do so. Just understand what's going on, understand your risk, make a great decisions for yourself, your family, and your portfolio. All right, now let's talk about where I think GME can go forward. So, like I said, we know dilution is happening. We know the share offering is happening right now. What we're looking for here is we're going to look for if this area holds. So just like last time, once the dilution, once the offering was complete, GME blasted off. I think we're going to see the same thing again. At this point in time, on a day like today, in the market, and where sentiment's bad, and oh shoot, we're getting diluted on, now is a time where it can consolidate. So don't be surprised if we consolidate, just like we did back here. We can consolidate, we can even drop off a little bit. Just make sure if you are doing anything option related that time is your friend. If you're buying shares in here like me, like you're putting in an order for shares potentially in here, I mean, shares are your friend. The reality is the gains aren't going to be as good as if you time it in options, but also the reality is like this is, you know, when stocks are this erratic, right? It's tougher to time options. So shares are the safer bet. And so the safer you get, the less potential the gains are going to be. Right? So it always goes back to your risk reward tolerance. So I'm going to lay out a couple things here that we need to watch out for. So I said in the space call too that if we come up here and we double top around 47 in here in this range, and this can actually be, so let me go back to the fib. If we come up here and we kind of catch an internal double top, so dilution gets done, I think what's going to happen is if we double top up in here, we'll see a little bit of a pullback. We'll see one more push, might get above here, and then you're going to sweep the lows. And if we sweep these lows back over here around 18, then I'm going to be incredibly bullish. Now, like, that's when you go, wait, what? So if we come down here and we sweep these lows, I absolutely think this type of move is going to happen at that point in time. And this will make a lot of sense, right? We're going to be coming up here right around that June 21st. I wouldn't be surprised at all if we're up in here. And like I said, don't pay attention to the timeline here. That's irrelevant. People ask me all the time, well, like, what kind of time frame are you looking for? And I'm not. I'm looking at levels. All right? When stocks are this volatile and news can come out at any point in time, time is not what I look for in any way, shape, or form. Being as honest as I can, I think one of the best ways to look at options is whatever time you personally think, not what I think, whatever time you personally think you've got going on. I recommend half the strike and twice the amount of time. So, for instance, if you were like, if you're the person buying 128 calls for this week, I think you are going to get what you deserve. So if you're like, well, yeah, I could see us, rounding out for a couple of days, and then, potentially by June 21st, we could be back up here at 50. Then I would say look at 35 calls and look at, 2-3 months out. So now you're going to pay a little bit more doing that, but just because it's cheap doesn't mean it's you're getting a deal, right? Going, oh, the 128 costs, those are only $5. Me like those costs. Just because it's cheap doesn't mean it's good, and just because it's expensive doesn't mean it's bad. So that's just kind of a general rule. Half the strike, twice as much time, I typically think is a good rule of thumb. So if we come up here and kind of make an internal double top, then I think we're going to get a break, maybe one more push, but then I do think you could get a sweep down here of the lows. Now, that's not guaranteed to happen. This, in my opinion, this would be something like whether or not Roaring Kitty either rolls his calls, whether he exercises his calls, which I don't think you're going to get a big drop necessarily if he exercises the calls, or if he just takes profit and closes them out. Then we could get a sweep of these lows at that point in time. And if we get a sweep of these lows, if we take out all these people, because there is a large liquidity pool right in here, right? Because the reality is ever since this move down here on Friday, May the 24th, and then we gapped up, all we've done is make higher lows. So and this is what I teach all the time, is the market needs, or individual stocks, however you want to look at it, they have to have liquidity to move. And just like I've also tweeted before many times, is the safest time to enter a trade is when all stops get taken out. Now, what does that mean? Well, a move back up here, anybody who entered puts is really going to start feeling the pressure. They're going to start closing out up here. Definitely, they start getting above here, which a typical, let me get rid of this fib. So what a typical trader is going to do is they're going to have their stops, a couple points above making previous highs. So even if they come up here and test, and then it starts to pull back, the people who are short are going to go, oh, we got a clear double top going on. I'll take profits back down here at 22. Like I said in the space call last night, the most likely path is the one that screws the most people. So you're going to have people who reload puts up in here. Maybe they already have taken profit, and then it comes back up, going up, treat resistance like resistance. They reload puts right here. Then they get blasted out. Longs start celebrating. You have breakout traders who are going to enter in up here when you start making a new high. And then the puts get blown out. You trap new longs. Then you make a sweep of the lows. Once that happens, now all these new longs up in here are going to be trapped. These people down here are going to start sweating and testing. These gap up people down here are going to start sweating and testing. You're going to get stops taken out along the way. Then you've got and this is also too, this is going to be a large area where the 200-day moving average is going to be sitting, right? And that's kind of why I drew it back down to here. So you're going to have people who want to clear out. So you're going to have shorts that want to clear out around that 200-day moving averages. You're going to have people who naturally want to go long, and then that is going to be your springboard. And then I really think you can test new highs at that point in time. So you have this big move one, you have this long, annoying corrective move in here, and then that's how you test your all-time highs. Now, what I don't know, Okay, let me say that again. What I don't know and what I'm watching for is, has this type of move potentially already happened? So let's look. So if it has happened, then I think we could catch the sweep low this week. So let's look at it. So right here we have our equal highs, right? Exactly like what I was just talking about. Then you had more people who reloaded. Then you have the big move. This was the anticipation of the Roaring Kitty live stream. People getting out of the way. We have no idea what he's going to do on this live stream. Then you have the dilution that came out, and that's the one that really sucks. So now are we starting to kind of get this move where essentially now we're going to take out these lows and then we rocket at that point in time. And when I say rocket, then we start to move back up. But the reality is you know, the moves up are typically pretty fast and furious on this stock. So, and the reality is this sweep can really be anytime once we start to get below 18. Like I just said, what move's going to screw the most people? Well, the move that screws the most people is kind of coming right in between, right? Where it's like, I'm going to wait for the 200-day moving average. Then I'm going to snag me some calls. And then we never even get to it. So that move, you sweep the lows, and then you gone at that point in time. So everybody that was waiting on the 200-day, so there is a massive, I don't care what anybody says, there is a massive liquidity pool right here. So this makes a lot of sense too. I would love for maybe Tuesday or Wednesday, you know, we get down in here. I personally would sell some more puts even at that point in time. I think you get down here and you start to curl back up. So if you see a move like this where it starts to sweep those lows and then it starts to curl back up, don't be surprised if right in here, that's also where you get a, hey, the offering is complete. And then you start to get a move. I think somebody was saying between there's GME earnings and then there's the shareholders this week. If it's all doom and gloom this week leading up into the shareholder meeting, that could be absolutely what takes you out of here. Some type of catalyst. There will always be news that's going to justify this move, whether it's a Roaring Kitty. So honestly, that's what I'm looking for. I just don't know. I just don't know if I feel like this is valid in my opinion. And typically what you'll see on these two guys is you'll see what I've already highlighted. You'll see trend lines like this. We have trend line traders just going bounce. We got a bounce. Oh, now we got another bounce. So you'll see those, and then you'll sweep those trend line traders, and then you're gone. I posted a chart like this on SPY a couple weeks ago, where it was looking like an inverse head and shoulder setup, and I was like, no, I think that's going to fail, and I think you're going to sweep the lows, and then you'll get a big bounce. And so far, that's exactly what we've done. So it's like a week or two ago. Feel free to go check my timeline on Twitter on that. But this is very interesting. So obviously, I would love for us to already have our low. I would love for support already to be support. So, I mean, the two things that I'm looking for is we've already got our low, and then we kind of curl back up. Now, what we don't want to see is we don't want to see a curl back up here, which unfortunately I think this is the most likely path, is a curl back up here. Something happens with Roaring Kitty's option, whether he exits them, you know, he takes his profit. I mean, if he comes back up here again, you know, he's going to have made a whole lot of money. It makes sense leading up into expiration, and then that could then lead us to our sweep of the lows, and then we get our big move. Honestly, ideally, that, in my opinion, that's the best thing. So I know that's going to piss some people off, and I don't care. I'm analyzing the stock the best way that I know how. So essentially, between 46, even a few points higher, even up to maybe in the 50s a little bit, that's where we really need to start seeing some life. If not, if that gets rejected, leading into that June OPEX time, I don't think there's any question the stock is going to see a pretty significant sell-off. Again, 18 doesn't necessarily have to happen, but I do think we'll see a significant sell-off again at that point in time. So overall, that's what I'm going to be looking for. The best case scenario for me, in my opinion, is we see this move, we catch a rejection, maybe even make a little bit of a bigger high, but then we sell off, we sweep the lows, and then we really press from there. And I think, I'm not going to get into it in this video, but there's a lot of things timeline-wise that I think that makes a lot of sense as well. Now, if in the short term, we hit that move in the next couple of days, you know, dilution is still going on, and we sweep this low. So really that's what I'm looking for, a sweep of the low of 18. If we get that in the next couple of days, then this move could already potentially happen. So long story short, 18 is going to be a spot that I think would be a great place. The risk to reward 100% is upside at that point in time, 100%. Now, that intermediate low that myself and a lot of other people talked about in the meantime around that 23-24, the only, and here's why I think it still could happen. I wanted to see a bigger, stronger reaction in kind of that 23 to 24 area today. If that dip would have gotten snatched up like really strongly, then I would feel better about a short-term move back up to the 47, the upper 40s, lower 50s. I would feel much better about that. But there really wasn't like a super strong reaction today, right? It was okay. It was okay. But if there would have been a strong bounce at that kind of 23, 24 area, like if we would have closed, you know, back up towards the 27, 28, then I would have liked us to have potentially seen in the upper 40s to 50s potentially this week, and then see what's going on, because we're kind of forming a sign of strength up here. Well, what does that look like? Looks like this, right? Where, you know, back over here we had our automatic, we had our automatic reaction sell test. We pushed the top of the range, then sold all the way off, pump back up, then we got our spraying test, now we're moving up. So in this range right in here, we are creating an SOS, which stands for sign of strength. If you haven't studied any type of Wyckoff, like I said, I've got the schematic pulled up here, but the reality is the market moves only in 4 phases. You're either in accumulation, you're in a markup phase, you're in distribution, or you're in a markdown phase. That's it. And like I teach many times over to my Discord, it doesn't matter if you're looking at a daily chart, a weekly chart, a 15-minute chart, a 5-minute chart. This is constantly playing out on all different time frames. And you might be in accumulation and markup on a 15-minute chart, while on the bigger picture of things, you're in distribution. So what we want to see is we need to see this support resistance flip to stay up in here to continue to show this sign of strength. And even if you look at it like this, sorry, let me go to a little bit lower time frame here. Even if you look at it, essentially this is kind of your triangle consolidation look, right? So I mean, the reality is we can bounce around in here, and we're either going to get that break up or we're going to get that break down, right? And that kind of leads to that double top area that I talked about. So when I just look at the chart on a daily basis, I still think the most likely thing is to push up here and test towards that 48 to 50 area again. If we don't break through that, then I think we could see a sweep of the lows of the 18 area. So what I favor right now personally, the way I'm looking at the chart, is a curl back up, some more, bullish things happening, some roaring kitty catalysts, then, him sell, him roll his calls, exercise them. Like I said, if he exercises them, I don't think we would necessarily see a sweep of the lows. It'll be interesting. But if he just takes profit, then I don't think there's any question we would probably see a sweep of the lows at that point in time. And then what you want to bet, if he took profit here, what you want to bet, you're going to see some unusual options activity around the 18 range once again. So right now, I still favor a look that looks more as a kind of curl up here. If, like I said, if we start failing in here, then I don't think there's any question that we would sweep and then we could push at that point in time. So overall, This is what I'm looking for. We want to see that sign of strength. Sign of strength fails. I just, honestly, I really don't see, a lot of super negative catalysts coming. I don't see a reason for dilution. I mean, it would only be if, Ryan Cohen, if they do something with that $5 billion that, Wall Street just absolutely hates. In that space call last night, Laid Back was talking about, it's pretty much a shell company now where it's, they're sitting on $5 billion in cash and the company's worth more than that. So, it's worth at least like 11 to 14 anyway. So, those are kind of the scenarios to look for. Now, like I said, you go to the hourly chart and you already have exactly what I was talking about. These kind of internal double tops, then a break of it. So short term, I mean, I personally, what I would like to see is I would like to see a sweep of these lows either Tuesday or Wednesday, and then we start to curl out at that point in time. Now, if we hold here, which is certainly a possibility, but if we hold right in here and we just start to curl up, then I'm going to be more concerned about the daily double top. But if we get here, and like Ryan Rigg talked about, it's nice the fact that, if you'll notice, Roaring Kitty was just chilling the entire time. So even if we sweep here soon, and then by the end of the week we recover back up towards that 25, then, and like I said, nothing's going to be just, straight up or anything like that. But then I think you can start doing something like that right there. So I hope this video was helpful to you. I know it was long. I know it was all over the place at times. Please go back and rewatch it as many times as you need to. Please feel free to reach out to me on Twitter and ask questions. Yeah. Much love, my friends. Got an interesting couple of days coming. I'll catch you guys in the next video. Once again, please like and subscribe, all that good stuff. And yeah, share it. Tell your buddies. Have a good one.